Hello subscribers, welcome to the Fast Profits Daily. I'm Brijesh Bhatia. In this video, I'll be discussing about the stock called Power Finance Corporation. Power Finance Corporation is the leading NBFC stock or the government owned NBFC stocks which finance the power sector. If we look at the various projects which are being undertaken in the Indian markets or issued by the governments, the finance has been done by the Power Finance Corporation, or it's known as PFC. Since the October 2022 low, probably it's around 8 months or eight and a half months, the stock has nearly doubled. From the low of, I guess, around 96, 97, we have seen the highs of 197 on these stocks, and the rally has been tremendous. Well, it is. Is it the good time to buy or good time to sell, or the stock is into the overbought zone? I'm not looking at the views whether you should buy or whether you should hold or whether you should exit the long position, but I'll be sharing some of the insights what my chart is indicating. Well, again, I want to highlight this. This video is not about recommending the buy or sell, but it is the price chart what is indicating, and I'm not looking at a smaller daily time frame or hourly time. I'll be looking after the monthly chart, and generally the monthly chart are the long-term charts on the stock, any stock you are analyzing. The monthly charts come when you are looking for a primary trend. So let's start with the first chart, and this is the monthly chart which I've been highlighting onto the Power Finance Corporation. Now, if you look at this chart since 2008 lows, we all know that 2008 was a depression, the recession level, and if I just look at most of the global markets corrected, and we saw V-shaped recovery coming in most of the global markets as well, and the PFC was not let out. And if you look at right from the stock which was trading around 65, 67 levels, fell back towards the lows of around 20s, and we saw a V-shaped recovery coming in the stock headed towards 95, 94, 95 levels, and that to the span of the lows of 2008 to the 2010 mid. And this was not the case with PFC. Most of the stock you see the charts when the V-shaped recovery happened post 2008, 2009 lows were very much form in the stock. Most of the stock has gone 3x, 4x, 5x, 6x, and somewhere has gone 10x as well. So this was not the surprising factor for me over here that this stock from the 20 has gone to around 94, 95 levels, nearly 5x. But since then, if you look at the price corrected back towards, if I just look at it by 2011, 2014, 13 mid, it went to the lows of around 40 and nearly 30s. So the correction was also healthy from the higher levels of 94, 95 levels. But if we just look at one thing right from 2008, apart from 2013 lows, which was the slightly lower lows, the primary trend has been very, very bullish. Most of the lows, if you see from 2013 mid, the lows are very, very much higher over here. We saw the lows of around 30, then we saw the lows of around 43, 44. We saw lows of around 50, 52 levels. Then probably around 95, 97 levels, as I said, in October 2022. So lows has been going higher and higher. Looking at the monthly chart, you tend to know that the primary trend, the long term trend, is very, very bullish over here. Now, at the same time, if you look at the highs right from around 2014, and even if you look at the 2010 highs was around as I said, 94, 95. We it surpassed 2100 levels in 2014. It made a higher high at around 115, 120 sort of levels. Then it went around 127, 128, and now nearly trending at around 197 highs. It's been trending at around 190s around level. So it's clearly indicating that the primary trend over here is very, very bullish. And I'm not looking, as I said, I'm not looking at the daily chart for an intermediate trend, but just looking at the monthly chart for last 15 years of data, the trend has been very, very bullish. If I want to highlight over here a few things, and I'll be discussing three indicators onto the charts: the Bollinger Band, the MACD, and the RSI. So these are the three indicators I'll be analyzing on the detailed one for you. And you can at the end of the video you can decide, and or I think you will be informed about what the structure has been developing, and take a decision. Again, I'm repeating, this is not a recommendation video, but just to highlight the chart parameters. So let's start with the Bollinger Band first. So basically, what is Bollinger Band? Bollinger Band is the standard deviation or a formulaic indicator developed by John Bollinger. And what does this indicator do? So if you look at this, there are three lines on the chart. The upper and lower are the blue color, and the middle line, if you look at, it is the orange color. Now, what does it do is, this is the 14 period average, 20 period average onto the Bollinger Band. See, orange line, if you look at, that is a 20 moving average of on the monthly chart, and the upper band and lower band are this two standard deviation, positive 2 and negative 2. So the positive 2 highlights at the higher level, and the negative 2 at the lower levels. Now, if you look at right from the V-shaped recovery in 2009, the prices went higher, and the prices or the Bollinger Band highs were also going higher. At one point in time, it crossed above the highs of the Bollinger Band, and then it resisted. If you look at the whole momentum, the fall was very, very severe. And now, if I want to highlight one thing over here, the from the average, the deviation was somewhere around 50% when the highs was made, and in the whole rally, when the deviation was with the moving average, it was somewhere around 42%. But at the peak, when the prices went up nearly 50% highs, or the 50% standard deviation, which means that when the highs was somewhere around 100 rupees, the prices were trending at the average was trending at around 50. So which means that there is a deviation over here. So 50% deviation from the base or the average, it's been a crucial. Second, like if you look at 2014, once the bottom was made in 2013 and the prices rallied at a faster pace, the deviation was nearly 100% over here from the average when the prices were peaked. Third time in 2017, its deviation was around 56-57%. 2019, the similar structure happened, and the deviation was somewhere around 37% over here. Interestingly, when we had a 2020 fall, a pandemic fall, and most of the global markets were correcting. Interestingly, this stock didn't break the previous swing lows. And as I said, the primary trend is still positive onto the charts. But the V-shaped recovery which happened, again, there is a deviation from the average of around 52%, nearly 50% when they first started work. And current point in time, where we are in 2023, where the prices is trading at around 190 plus levels, the average is somewhere around 125. Again, a deviation of 56-57% from current levels. So yes, this deviation has certainly played out. And if I just go by the history, when this deviation has happened over 50% or nearly 50%, we have seen a healthy retracements. 2010, 2010-11, when the prices were made a higher or deviation of around 50%, it corrected by around 48%. 2014, when it had a deviation of over 100%, it was the only time when we have seen a deviation of around 100%. Most of the times when it deviates over 40 to 50, 55%, price tends to correct. And this was the only ones where it has deviated by 100%. But again, the correction was healthy by around 55%. 2017, as I said, 50%, 57% deviation, the correction was 58%. 2019, when the deviation was around 37-38%, prices corrected by around 42%. 2021, where I have highlighted 52% deviation, the prices corrected by around 32%. So whenever this deviation happen and prices heads above the Bollinger Band, unsustainable move, we have seen a huge correction coming onto the monthly charts. And again, these numbers are not small: 50% correction, 40% correction, 32% correction. So these numbers are not small. So prices tend to look at the healthy correction. And as I said, the primary trend is very, very bullish if I just look at it. And even if in case we correct at current point in time, so the previous swing low of around 97 will act as a major support over here. RSI. Now, if you look at the next chart, the RSI, look at this RSI. When the RSI were tested, and generally, what is the RSI? RSI is the momentum indicator. It defines the strength of the momentum, and overbought oversold zone are highlighted, so it trends between 0 to 100, and 30 is being called as oversold and 70 is being called as overbought zone as per the RSI theory. Now whenever the prices have tested the 70 or gone above 70, we have seen an unsustainable move onto the price action. Only once in 2010 when there was a severe V-shaped recovery. Again, I'm looking at the V-shaped recovery because it was a faster rally. The rally was much faster. RSI went to somewhere around 80, 82 levels, and then we saw a price correction. As I said, price correction was around 48%. 2014 again it tested around 70, where we saw a 55% correction. 2070 again 50%, the RSI was around 70, prices made a high, we saw 58% correction. 2021 we saw a 32% correction, again RSI we know, and this time again RSI is trending above 80 on the monthly chart. Again, this is because we have seen a faster rally coming in on month. So look at, since the October, we are looking at the bullish scenario or charts. The bullish bars have been formed. It indicates that yes, the rally has been faster, RSI has been trending into the overbought zone. It is a sign of cautious over here onto the price action. Though I'm not indicating that this is a sign of reversal, but yes, this is can be the sign of cautious, because this has been if I just look at, this has been the sign of overbought zone onto the RSI. MACD, if I just look at, and what is MACD? Basically, MACD is again a momentum indicator, and there are two strategies or two things to look into the MACD. So it's moving average. The full form of MACD is moving average, convergence, divergence. So there are two strategies one should look at, or two things one should look at into the MACD indicator. First, the convergence and divergence. So basically what does it mean? And when the two averages, if we look at these two averages, when they diverge against each other, they tend to converge when the price are extreme, have seen an extreme rise or extreme fall. So as we are looking at the prices rise, so we are looking at the divergence when the prices rise with at a faster pace, and then they tend to converge, which means that the average comes together, and then there is a crossover of negative crossover or a bullish positive crossover. So in this case, as we are looking at, as I said, we are looking at the higher levels, we'll be looking at divergence as well as negative crossover. So let's look at again with the start with the historical move of 2010, a faster rally. Look at the divergence of the averages. I'm just not looking at the crossover as of now, I'm just looking at the divergence. I'm highlighting the divergence. Look at the divergence at the average has been diverging at a bigger range. Again, 2014, the rally was faster, the divergence was at a bigger space, then we saw a convergence and a negative crossover. Similarly, in 2017, the convergence was at a slightly higher pace, negative crossover, prices corrected. 2021, similar thing happened, a divergence after a rally and then a negative crossover. At current point in time, we are looking at a huge divergence coming into the average. And generally, you can't trade based on the MACD, but MACD can give you a highlight where the prices are diverging by a big margin over here. They generally, even I'm not a trader who looks for MACD and jumps onto the trade buy or sell. But yes, MACD plays a key important role to identify the momentum, the lack of strength, or is there any strength into the momentum. But as of now, though there is a strength into the momentum, but the divergence into the overbought zone. And then look at 2010 when the RSI was, the MACD was trending above 13, 14 levels. At the similar levels, we are now reaching at around 21 onto the MACD. So yes, I believe this is a sign of cautious again onto the MACD as well. So just to sum up and look at all the indicators together, the Bollinger Band, the MACD, the RSI. Now, every time MACD or every time the prices test the Bollinger Band, if we have seen a divergence coming, the RSI trending in the overbought zone, we saw a correction. Look at 2010, 2014, similar structure happened. 2017, similar structure happened. 2019, 2021. A similar structure happened when the Bollinger Band has gone into the prices have gone above the Bollinger Band, RSI trending into the overbought zone, MACD giving a divergence sign over here, and the same structure is visible now in 2023. And this is That's the why I think that this is a sign of a cautious onto the longs. As I said again, this is not a recommendation onto the PFC whether you should buy, whether you should exit the position, whether you should look at the buy on dips. But this is just a chart structure which indicates that prices are into the extreme overbought zone. There is a divergence in MACD, and Bollinger Band is indicating a pause to the may take a pause to the momentum, and there could be a potential a correction. And again, I'm looking at the primary trend onto the monthly chart. They are very bullish with the higher low structure intact. So yes, as a subscriber, you should be informed to take a decision onto the PFC. And as I said, if you should consult your investment advisor as well. And again, I'm repeating, this is not a recommendation where I'm taking a trade onto the PFC. But what are the chart indicating? What are the chart speaks onto the price action of PFC that I've highlighted in this video. Signing off, Brijesh Bhatia.